Hello, good day, audience. This is Mr. Accounting, and in today's session, we are going to start double entry system. This topic is valid for almost every degree of accounting because this is the topic from which the accounting starts, on the base of which accounting is done. So this topic is related to almost every degree of accounting because without this, you can't do accounting. So it can be relevant for O A level accounting, ACCA, FA1, FA2, F3, BCOM, BSc accounting, MCOM, MSc accounting, even other fields like if there is accounting subject like you have CMA, you have a CFA, you have a ICMA, you have thousands of fields related to accounting. This is almost related to every accounting field. Plus, those students, those people who want to learn accounting from zero level, this topic is also valid for them because when you start from the zero level, you have to uh, first of all understand the logic of accounting on which the accounting has to be done, and this is the that topic. So we're going to start our first topic, double entry system slash accounting cycle. What is accounting cycle? What is double entry system? We'll study today. So first of all, we have to understand that what is business. Then we'll go to the topic. See, when the business is running, for example, I am running the business of furniture. Running the business of furniture, chairs and tables. So when my business is running, obviously it is my duty to record the transactions. So what is transactions? What is business and what is transactions? Basically, we have to understand the major definition of both of these. If we talk about the business is anything that you are doing to earn profit. If there is the intention of profit, it means you are doing the business. Like I have, for example, these markers, and I have the intention to sell them at profit so that I can enjoy the profit. That that process is called business. It can be on large scale, small scale, medium scale. That is another topic, but business definition I have told. The intention to earn the profit is called the business. Transaction. Transaction is any financial event that occur. For example, I am going to the bank for depositing the money into my bank account. I will go use the deposit slip and deposit that amount in the bank account. This is the transaction, one of the transaction. Like I am going to sell my this board marker to any customer. I have sold it. This is the transaction. In return, my customer gave me the amount. This is the transaction. For example, even anything that has something related to the financial flow that will maybe the inflow or outflow, cash flow or cash inflow or cash outflow. That is transaction. Like anything that is attached with that. If there is no amount attached with that, maybe directly, maybe indirectly in a sense. For example, I have first I will give you example of directly and then indirectly. For example, I sold this marker to a customer. I said, take this marker and in return, give me money. Obviously, he will pay the money and I will give the marker. This is the transaction and this is the direct financial transaction that the customer had paid me the money at time that I have sold the market. But there are the chances that there are in markets throughout the world, when there are the large scale businesses, they don't pay at time. Often they don't pay at time. Then what happened? Basically, I am selling the material or inventory to my customer. Okay, I have sold that and I have asked them for 30 days credit period. That we will pay you the amount, but if we are selling, obviously the customer is saying to us that I will pay you in the amount, but give me 30 days credit period. I will say, okay, you are the good business, you are the large scale business. I trust on you, and okay, you can give me after 30 days. So deal done. After 30 days, obviously he paid me. Listen, this transaction, when I sold the inventory to the second party, to the customer, the cash was not directly involved. The cash was not directly involved, but even the cash was not directly involved. This was a transaction. Selling of the marker at that date was a transaction because because that has money attached to it, but not directly, but indirect. For example, if we talk about the talk about this point, that I want you to understand the transaction, the concept of transaction clearly, so that you can it can help you in double entry system. For example, I sold 10 kg cement to Mr. A on credit. I sold 10 kg cement of Mr. A on credit for 30 days. I said that you can easily pay in 30 days for $100. After 20 days, not after 30 days, but after 20 days, Mr. A paid me the amount $100. Now, I am going to clear your concept here that how many transactions had been done here. If as a normal person, I would say that it is a one transaction that I sold the cement, and in return the cash is received by me. But actually, this is another transaction. This is transaction one, and this is transaction two. The main reason here is that you don't have to see that the amount has been in return for the in return for the sale that has been done 20 days ago. No, you have to see that today I transferred the benefit. This is the transaction because the money is attached with that. This is another transaction, and when the cash is received, that is another transaction. So try to understand that transaction is basically different partially transaction can be partially divided into different stages. Like when I sold the 10 kg cement to Mr. A, that is the transaction. When the money is received by me, that is the transaction. If we talk about the transaction, there are two type of transaction. It can be on the cash basis, it can be on the credit basis. Cash basis is like it is easy. I have sold my pen, in return I got the money, transaction done, no issue. But on credit, I sold my pen. I've given him the credit period. After the credit period, like after the days I've given him for the credit, he paid me the amount. They are two transactions. That is credit transaction. So the cash transactions and credit transactions. So business and transactions, these two words are the major words that you have to understand before understanding the double entry system. Now, every transaction must be recorded. Every transaction must be recorded. Why? For the recording system, for reporting system, assuming that I am running the business and I am running the large scale, or the level my business level is like I can't deal any I can't deal all the operations myself. For example, I am dealing in 3 to 4 cities or 3 to 4 countries. So it would be very difficult for me to see the business daily on the daily basis on the every day I go to every office. This is not possible. So I hire the managers. I hire the managers for the my business. When the managers go there and manage the business, after some time, I can go even after 6 months or 1 year, and I say them, give me the reports, give me what is going on. So what the manager will show me? They can't show me the blank face. They will show me the transactions report. They will show me the transaction report that said we have managed your business. This is our full year report. You can see we have done the XYZ sales. We have earned this amount. We have incurred this cost. We have given this payment to supplier, this payment for tax, this payment for any other interest payments, or we have taken the loan from the bank. all the transactions, all the transactions of the business is recorded, and for the purpose of maybe reporting to the owner or many other purposes we will see in that later in the topic. So every transaction must be recorded, and the process of this recording, the process of this recording is called accounting cycle. The process through which transaction is recorded in 1 year. Basically, transactions are recorded on yearly basis. After a year, a report is made, and on the continuous basis, at the year end, the report is made by the business for various purposes. Major purpose is to the reporting to the owner. So, accounting cycle is the process through which the transaction goes to the report. Basically, transaction can't be written directly in the report. It is gone through different phases, different parts, different stages. After that, the statement has been made and it is reported to the owner. See, accounting cycle basically consists of 3 steps: recording, classifying, and summarizing. Now you will be saying that, sir, you have started the topic of double entry, but you are not even taking the word name of double entry. What's the issue? Basically, double entry is not the thing like that can be studied directly. Basically, you must have the plot for that. We are basically understanding the base of double entry. Then we will go to the double entry system. Maybe in the first part, we will not be discussing the double entry. First part would be the like introductory lecture, and after in second part we will be dealing with double entry directly. So don't take tension, we are basically starting accounting cycle first. So coming towards the accounting cycle, we have seen that accounting cycle is divided into 3 stages. First stage is recording, then classifying, then summarizing. When the transaction has been done, when the transaction has been done, like I have sold something, I have sold something, the transaction has been done. Now, obviously, I would be having the record for the transaction. Maybe I have sold something to Mr. A. There would be a record for that. There would be any document that would be the proof of that transaction. That would be in this case would be the sales invoice. When you go to the shop or for to enjoy KFC or McDonald's. When you pay in return, they give you a slip. Basically, that's not the invoice, that's the receipt, but that is the payment proof. That is the proof of the transaction. So for this transaction that I have sold to Mr. A, there is a document that is the proof for the evidence for the transaction, that is sales invoice. I was sale invoice. Now what to do with that sale invoice? Because there is not one sale invoice. There may be thousands or 10,000 plus sale invoice in the business, because you have say you have to sell on a daily basis, and after the year you have a lot of invoices. So what to do with that invoices? What to do with that invoices? First step is to record that. Basically recording is the first point of the accounting cycle through which the transaction has to be gone. Recording is done. Basically, I'm just on the basic level. So just I would be telling that where the recording is to be done, which books what are the books that in which the recording has to be done. So first of all, recording has to be done in books of prime entry. Business has books of prime entry in which you have to record the transaction, and it is the first step after you have the evidence for the transaction. It is the first step that you have to do. Books of prime entry is basically divided into 2 types of books: general journal or and day books. Business has two types of books of prime entry in which you have to record general journal and day books. General journal and day books. You must learn this name so that you can in future when I will be taking this name, don't forget. Okay. So general journal and day books. In general journal, you have to record the transaction on which system, on double entry system. Basically, I am going to start double entry system in the topic. So for that, I have done all this uh, structure. I have taught all this structure so that you can understand that where the double entry has to be done. So accounting cycle have three steps. First step is recording, and recording is done in books of prime entry. Books of prime entry is divided to general journal and day books. In general journal only, you have to record the transaction on double entry system. And in day books, obviously in day books you have to record something, but it is not on double entry system, but on single entry system that we will be discussing after double entry system. After completing our double entry system, we will go to single entry system. That what is single entry? How to do single entry? And what are day books? What is general journal? What every topic would be covered. Okay. After after recording. After recording, we will go to our next step, classifying. This is not like in the everything in the one lecture. This is the series of accounting. This is the accounting basics. Basically, if you learn recording, classifying, summarizing, and after that, I will tell you what's the next step. It is the very powerful topic of accounting, basic accounting, from which the accounting starts. Every issues, every like transaction, every issue in the business. For example, if you talk about the fraud, if you talk about any error, if you talk about the purchases, sales, expenses, these all have to be gone through this. After that, you have like further topics, further major level topics. This is the basic accounting, and this is one of the most important topic. One of the most, this is only the one topic from which the basic accounting has to be learned. Okay. So after that, you have to go to classifying, and after classifying, you have to go through summarizing. We would not be discussing the classifying and summarizing here. The reason behind that is we are going to start double entry system, and double entry system. After double entry system, single entry system. And after that single entry system, I would come back to this PDF, and we would be discussing classifying, summarizing, where the classifying is done, where the summarizing is done. This is the issue that would be discussed in later topics. Obviously, we have the series of topics. I would be covering the all of the topics. Don't take tension. Your brother is with you. So if I revise the topic that I've already taught you, that business is something that has the intention to earn profit, and transaction is like financial event occur that is something attached with the money. Okay, like I sold 10 kg and took the amount at the time of the sale. At the time of sale, this is the transaction. Okay, but it is cash transaction. But I sold the amount, sold the pen, sold any product, and in return I got the money 30 days after the sale. So it is also the transaction, but it is credit transaction. And every transaction must be recorded. And for recording, we have the process which is called accounting cycle, having three stages. Three stages including recording, classifying, and summarizing. Recording has to be done in books of prime entry, which have two books, general journal, and day books. General journal have to be recorded on the system, and on the system that is called double entry system, and day books have to be recorded on the system called single entry system. Okay, so this is the basic plot for double entry system. In our next lecture, that is most probably in the playlist, that's lecture after this lecture after this lecture would be on the double entry system, and double entry system would be learned in the next part. So meet you guys in the next part, but come back to the next part as soon as possible so that you can't forget the topic. If you will take break with in this part and another part, it would be difficult for you. So if you are like studying this topic, go to the next part and start learning double entry system. Till then, take care. God bless you.